The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
On Basil Chapman, Tiger Technicians Hour. My pleasure to be here Monday through Friday, market days. And if you're here, you know that this is the Tiger Technicians Hour, my time to take the calls. And you've had calls all day. And I hope that it keeps going this way because Nico and Paige will be next. Then you've got Dave White. 1 o'clock, you got Steve Rhodes. Then you got Dave White. You got Tom O'Brien. Just a great day coming up. So let's look at the markets and what we're seeing here. You remember this time yesterday, starting on its way down, druggy news and the hesitation with Fed Chairman Yellen. Just really the fear factor was so high. The VIX index screamed up towards 19. It was amazing. And then all of a sudden, what you've got, one of the reasons why, although we were stopped out for a very tiny 80 cent, 90 cent loss yesterday on $177 stock, we went right back in this morning and we're long because I believe that was an aberrational move. I'll talk about it and we'll get on with the nitty-gritties. The S&P futures are up 24.50. Look at that peak C, and then it came down, arch formation. I had already drawn it in. What I was expecting was some kind of a bit of a pullback, but holding in the S&P minis towards the 2075, 2073 level, maybe even a tad. Instead, it went right down to 2040, was it? 2040 exactly, round number low. And now it's right on the 9-period exponential moving average, and it's also the 200-period moving average in the 120-minute chart that you can see. I want to go through these charts because it is the beginning of the month, beginning of the new month. It is the end of the month of November. We can look at those charts. I want to look at unless my Chapman wave methodology is starting to fail, I've been looking at the weekly charts of so many of the indices and so many of the important stocks. And at this particular time, I think there's still just enough energy left to go at least maybe to a leg C in the weekly chart. And I was expecting that to be next week. So the huge decline yesterday, nice comeback today, up 256 in the Dow at 17,735, up 27 at 2077 in the S&P. The comp index, let me just move this away and I'll give you the comp index right here. The comp index is up 70 at 5108. You know what? Maybe what I'll do is this. It's Friday. We've got time. Let's just do this. I'll go to the Dow chart right here, INDU, and you can see pullback. It hasn't made that leg B, and that really is a disappointment. The diamonds did, but the Dow hasn't. And that discrepancy I usually find is an incredibly important one. When I have the pattern that I call the Chapman wave stalk leg, every few years I'll find that I've got to watch that top at peak D really closely. Occasionally it'll be the diamonds that go to the D and not the Dow, or it'll be the Dow Dow index goes to the D, and there's a double top at C in the DIA, the Dow Diamonds, the trading vehicle. This is different. And this says to me, look at the weekly chart. 88% in the stochastic, still holding very strong. Look at the MACD expanding. Look at the histogram, those vertical green. Let me see if you can see. Yep, those vertical green lines. Wait a minute. I need to know that you're looking at what I'm looking at right there. Okay, yeah. So these vertical green lines are very good, very positive. Now let's do a couple of things. When we're looking at the monthly chart, it is still above the 9-period exponential moving average. That's good. The MACD is flattening out. That's okay. The stochastic is running sharply. That's good, but it's still only at 63%. So the day is young. I might be right off the wall. be getting that straitjacket ready. But I still see positives, and I'm getting messages and all sorts of things saying, oh man, there's one guy that's talking about cash and get ready for as if the world is ending. I don't see it yet, not until I get that skyscraper that I'm looking for. And I'll be talking about it a week from today in my webinar. Let me just go right there, TFNN. Right here, the webinar, it says opening call subscriber webinar. Elliott Wave 5, I'm going to discuss it. I'm not an Elliott Wave expert, but I've used it for a long, long time. And I use it only very specifically and only in a specific way. And it takes in most of the criteria that I'm fully aware of in the Elliott Wave. But those questionable things that many people have a tremendous time and frustration with, the Chapman wave methodology resolves that. When you get a flat, that's usually when we're looking at those arch or cup formations. So a whole bunch of things that we're looking at. When is it? It is this coming Thursday, the 10th of December at 6 p.m. It's for all subscribers to my opening call newsletter. And you can sign up for a free trial to attend. And what is it going to cover? It's going to cover, ooh, do I have that chart? Let me just check here. I'll tell you what it's going to cover. It's going to cover the infrastructure that I'm looking at that will pertain to the technicals in the market, the technicals in the longer-term monthly charts of the Dow and the S&P, and we'll go through the others, of course. What the relationship is to this particular, what I think is still leg 5, one of the strongest legs in Elliott Wave, but I'm not sure that this, I don't know yet, because that's what I'm going to be discussing, because I need a little bit more evidence of what the relationship will be to a major top, if it is 5, and when it would be, and what we should do, what should we be looking at, what areas, what stock areas, what sector areas, what are the ones that are now done for? They're kind of done, and have to. There are other ones. What about the? I'll look at some of the international markets, but it's going to be an hour, and I'm going to be covering a lot of material, and it's going to be really pertinent to where we are, towards your portfolio, etc. Now, let's just get back to our story here. Together with the webinar, whatever you do, if you're going to subscribe to anything, if you want to build up Tiger dollars, this is a perfect time to have that kitty ready for any services that you like. There's so many of us here, and each one has their own specialty, their own techniques. If you want to use Tiger dollars, this is the time to buy them, because you're going to get Salvation Army Tiger Dollar Holiday Sale. It's to purchase any amount of Tiger dollars during the Salvation Army holiday promotion and receive a 25% bonus, and up to 10% of your purchase will be donated in your name to the Salvation Army. Go to the front page of TFNN. We've got a chunk going on there. So let's get out of this, go back to our story. And I just want to look at the 120-minute, the 10-minute chart is in leg C. It's gone right to that resistance. This is where we started to break down yesterday, during this exactly 24 hours ago at 2074 in the S&P E-minis. Went all the way down to 2040, and we've come back to 2075. Isn't that, I mean, if you went to sleep and you just woke up and said, ho-hum, nice day today. You wouldn't have gone through all that yesterday. Okay, let's go on. So the Dow has a lot of work to still catch up, but I think that weekly chart is telling me that there's enough residual support, internal support, in the 17,500 high 17,400 area to at least maintain some upward bias for a little longer. That's what I'm looking at. I was thinking next week we'd be starting to look at shorts, because I would have got peak B. We would have had a bit of a pullback, and by Tuesday, Wednesday of next week, we probably would be getting leg D, and would work out perfectly for my webinar to say, okay, now we can start looking at the short side. But maybe, my theory has always been that markets that survive their September, October declines and go towards their recovery highs of the year tend to stay that way, sometimes close at the high of the year, and we'll see if that's going to be the case. All right, so that's the Dow. Those are the parameters. Dow needs 17,830 to really say it has enough energy to get and hold in the 17,900s if it can get there. So let's do the S&P. SPX.X. Because you're waiting to go to gold, I'll go to gold. Give me a moment. GLD's up 219. You do want to hear about gold. So this is leg C and a peak C made yesterday, day before, in the S&P. Had that very strong intraday spike, and we gave it back. That was Wednesday. Then Thursday was the sharp decline. And so today's the second day after that leg C made the peak C. And now we're looking at the S&P having more. S&P at 2077, up 27, really needs to climb and hold in the 2085 to 2087 area. If it can do that, it has a really good chance of making that leg C in the weekly chart, which in fact will be leg D in the S&P. See the divergences I've got here? I like to take those into account. So I'm looking at the S&P 500 stocks slightly stronger than the Dow. Okay, let's go to the QQQ. Right now, the QQQ is holding very well, holding the 9-period exponential moving average. Weekly chart looks good. I'm looking at the weekly chart, and I'm saying I see it as, in a way, a little bit of a leader. But it needs to maintain this leadership quality, and it really needs to get to the 115.90 to 116.50 area very soon. Now let's go on to let's go to gold. No, we have to do the IWM. IWM, which we were long, got stopped out for a little. We could have had a little profit and said we took a tiny little loss. It's rallying okay. It's up 79 cents. This is the one that I have to watch really closely, because the move towards low-price stocks going in towards the end of the year and early January, that started to look really good. But the deepness of the decline yesterday says, hey, you know what? Maybe we're going back towards just some leadership here. And I talk about leadership. My Dow quartet was just horrible. GE is holding very nicely. And certainly the weekly chart looks fabulous. But you've got IBM, which hopefully today's up. Yeah, it's up nicely, but it is the monthly and weekly charts are terrible. So it's the daily chart that's looking much better. It was okay, but the triple M chart came tumbling down. Today's good, but wow, that was a surprise to see it so bad yesterday. And the UTX chart, which is my Dow quartet leader. UTX is the one that says more intermediate term. Intermediate term says, hey, looking out, you got to be a little bit careful. But in the meantime, it hasn't been doing very well at all. Now let's go on with our story. Gold. Very strong move up today. Didn't do that yesterday. Didn't do that last night. Didn't do that early this morning. Then out of the blue, you just got this big run up. It's leg D in the 120-minute chart, and that's good. Gold is at 2270 right now, up at 1084. Got a lot of resistance coming in on the left side. That's going to be 1080, 1097 is the big thing. It closes above that. All of a sudden, you've got a trend change. And look at the dollar. The dollar is down sharply from its high. Oh, I want to talk about the dollar, because these markets that make fractional new highs after months and months, we've got to talk about that. I'll be right back. Dow's up 258.
It's true. Life is all about choices. At Everbank, they're making it easy for you to make a smart one with this special cash offer. Open a new Yield Pledge money market account with funds from another financial institution, or deposit new funds into an existing Yield Pledge money market account, and you could earn up to a $500 cash reward. And if you're opening a new account, you'll also get their new higher 6-month bonus interest rate, along with their Yield Pledge promise that ensures your yield will always be in the top 5% of competitive accounts at banks nationwide. Open a new account or add to one. It's your choice. To qualify, you must meet balance and other limited time offer requirements. Go to everbank.com/TFNN for details and deposit options, or speak with one of their banking specialists at 1-855-750-4051 for more information. You must act by December 31st, 2015 to be eligible. Everbank is a member FDIC.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Folks, we're back. Basil Chapman, Tiger Technicians Hour. Dow's up 266. S&P's down up 28. And this is, wow, if ever I wanted to see I said today to subscribers on my opening call that we should see a give back of at least a good part of the decline yesterday. That's what you want to see. So far, this is exactly what we're looking at. And people were looking at, not people, there were many fund managers. I could just feel it yesterday that there were fund managers who were looking to buy. I don't know what, I can't pinpoint it because just after years of experience, that's what you kind of, you get a feeling for it. But look at the way the VIX index right here spiked to 19.35. There should have been a 380 to a 400 point slide yesterday, going from under 15 to 19, over 19. Something was wrong with that picture. Now, we could still, that could be the hint that we're going to turn. I don't see it right now. I'm going to go to Jerry in the Back Bay to follow up on what we were discussing yesterday, and we ran out of time. Jerry, how are you?
All right, how are you? Yeah, we were discussing the euro.
Yes.
I mean, fundamentally, I think that yesterday the expectations were so grotesquely high, and the crowd, it was a crowded trade, and then there was massive short covering. So it was like a one-off, and that the euro now is going to go down, but at a slower pace, and so this is for like a 2 or 3 month thing. And
okay, so So what I'd say to you is, technically, I agreed with you. That's kind of what I was looking at, that there was still enough strength in the dollar, but that the dollar, let me answer your question right away, because what you were looking for is you were looking for the opportunity to at least start looking at another bout of selling that takes the euro down to lower lows. That's about as simple as we can make it.
Yeah.
Okay. I'm going to make a suggestion. I don't think there's a particular rush for it because I've got a feeling there's just enough residual strength in the euro right now because of the speed. Not everybody was able to cover. Not everybody was able to buy. So they're going to be, I think there's a high level consolidation of the single leg A. If it's going to be, so in the Chapman wave, we've got a technique that I call single leg A up. We saw that yesterday in the spikes beforehand that were given back very quickly. But in this case, you've got the euro daily, which has taken out about a month's worth of trading by spiking in, what would you say? That was more like 4 minutes or 5 minutes. I mean, most of that, I got the chart right here. Most of that was done starting from 7:10 in the morning, and then out of the blue, you got that major spike, which is at 8:40, and that's really the one that was that was the brutal one for the shorts because it just gave them no time.
At 8:30, Draghi made his comments about what they did. Yeah.
Correct. And in fact, I don't have my TV on for CNBC. I don't have it on at all. In fact, during the day, and I actually went to another room with my only other television set in the house, and I actually watched it because I'd finished my newsletter, but I wanted to see what. Normally, I've learned over the last 3 months that those 8:30 reports, I don't have to know what's even said. I just have to follow the futures, and that tells me exactly what the market response is. That's all you want. So, but this time, I actually wanted to hear some words, and the words were a little confusing, so I could see that there was confusion. And then what happened, the euro spiked up. Here's the 10-minute chart. It went to 1.0892 at 8:50, and then it came back, and that's where the shorts must have said, aha, we're right, it's coming all the way down, and then it held, and it went to higher highs.
In the question and answer period on Draghi's speech afterward, the first 4 questions was, why didn't you do more like you promised? They ask it in different words, each one of them, and it shows you the shock.
So they were upset, probably, the people who asked the question, or these reporters who have their set
that just represents the traders, where the traders were positioned. Sorry, it was the same mentality. Yeah.
Okay, so now this is what I'm looking at. I'm going to make the suggestion because in the futures, and you'll be doing it via the futures, right? The euro-dollar currency pair, probably.
No, I'll probably use the EU FX.
EU. FX or SX?
Yeah. Yep.
Okay. Oops. Did I get that? Yes, I did. No, I didn't. All right. I'm going to find that, and I'm going to talk to you.
EU FX.
F for Frank.
EU FX.
Okay, got it. Yep, I got it right here. Okay. I'll be right back, and we'll be back with Jerry in the Back Bay, Boston, and we talk about the euro, and then I'll go on to Kim in Denver.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. As we go back to Jerry, because I'm pretty sure we're going to run out of time. Sarah, you want to know about Caterpillar? It doesn't look good right now. It's just not looking very strong at all. The balance is kind of weak. And the same with the IYT, Julie. And that's kind of a heads up to say, I am anticipating there's going to be a nominal move to the upside. And then we're going to see what happens before I think that we get a deeper correction. So I'm going to go back, and this kind of fits in as well with Jerry, who we have on the line right now. And you wanted an EUFX. So this doesn't trade. This is one of those things where you position it because you're looking longer term, because you're not. As a day trade, these things are just.
I know. No, this is a 2 or 3 month trade for me. Yeah.
Right. So you have to book an appointment to buy it. Actually, is easy, but then you have to book an appointment to get out, or you have to get out when it's going your way because there's very low volume at all.
I know. Yeah. I don't deal in it.
It had just.
It's a lot cheaper than shorting the same.
Yeah. I just want to mention this. My biggest problem with this for the folks who are out there, because you're looking at this longer term, is that if folks, the EUFX, which is the ProShares short euro, if you are using this at all, you can get in real easily. Well, maybe you won't get in at your price, but you'll be able to buy it at market. But getting out is going to be real tough. If there's very low volume, they don't have to. Your order might not get filled for a little while.
No,
so
I've been doing this for 50 years. So I understand
you got it. Yeah, but I'm just saying that we have a lot of people listening.
What I do is I would try to get out on the day when the euro is plunging. and the volume tends to pick up on the.
And that you're getting your price because you can get out and there'll be no problem.
The psychology is heavy when the euro is going down sharply, maybe going from 102 to 103 to 102 in January or February.
Okay. So let me tell you. I just want to finish telling. Okay. So the EUFX. If you're going to get into this, I'm going to go back now to the euro. I want you to see what it looks like, and I can see what it looks like now. It looks kind of like the S&P chart. I mean, or the SPY, because it's running with the trend. This is what I'd be looking at. I believe that if there is a further rally in the euro, I'm not sure right now whether we have to put it together with gold, whether we have to look at the dollar pulling back, and that the general commodities are moving up. And I'm going to get to the next call, which will be on, I believe, crude oil. Let me just double check that CL is not a stock. I can't remember anymore. Yes, it is. Oh, Colgate. So he wants to look at Colgate. Okay, I thought it was going to be crude oil, but that all goes. It kind of ties together when we're looking at.
USO will tell you crude oil. Crude oil.
Absolutely, yes.
Crude oil is going to have big trouble. OPEC didn't do anything, and it's going to go down to 35, something like that.
So now let's talk about this, because as it has stood at this particular up until yesterday morning before the opening bell. The commodities as a general unit, even the softs, although the softs have had some rallies in between, basically they've been in downtrends. Here's the question. Are we about to get a situation where there's a divergence, a significant divergence, because the dollar, and let me go to the dollar right now, because the dollar is making the kind of top that is a top of significance in that it is going to take weeks to months before it comes back to the level that we just saw. Now, I'd like to speak to that, because that is really what you're looking at. If the dollar is internal strength. Now, let me do this. The stochastic on the dollar is at a weekly chart is at 92%. That's very strong. But the 9-period differential, the little green line right here that I'm pointing to, has started turning down.
Yeah.
But the slow-moving average is just steady as a rock. That's a good thing. The MACD is way below where it was at the last big peak that was back in March, was it? Yeah, March, the week of the 13th, when it hit 100.39. The MACD and stochastic were very high. Now the stochastic is high, but the MACD is failing. So there's a bit of a divergence there. So I'm looking at it and I'm saying, I've got a pattern that we know very well in the Chapman wave, which is called, it's the upside down lowercase h. I've drawn it in right here. I drew it in months ago when we were still pulling back. Remember, I said that there's a pattern on the left side that's a diagonal line, stops dead, and then it makes a cup formation. I'm expecting that we're going to retest very close to, exactly on or just above the left side high, which is 100.39. What was the high the other day? I thought I typed it in. It was 100.51. It met all the criteria I needed. What did I need? I needed 100.50. I needed 140 plus. I needed leg C to extend in the monthly, in the weekly, because I'd have to make a decision. Is this parallel count F continuing the previous peak E /C, which is the new one? And I have to wait today until Friday, and over the weekend I will do the analysis there, because we need to see where it closes. My rule of thumb is, if in the cup formation, if the price comes back and it pulls back more than 1/3, but especially 50% between the left side lip and the low of the cup, which is at 92, round number 92, 92.61. Let me just put that in, 92.61. If it starts to pull back, I've got to be prepared to look for the dollar to come back to its low, which would be 92.61. If it takes it out decisively, I can have a 1-to-1 to the downside, take you all the way to 87.20 in the weekly chart. So this is a very important. I don't want to be telling you anything here that that says to you, I'm so convinced that we've broken out that it's going to a D, and that will be towards the end of December. Why? I can't say that because the move yesterday, I don't care what the reason is, it took it directly to the left side high that was very important of 97.82 in the Chapman wave stork leg formation, 97.82, and the low yesterday was 97.59. Once you get into the body there, I have to say, okay, now look at your technicals. I don't think I would be rushing into the euro as a short right now. I'd give it a little bit of room. I'm in agreement with you because I think looking out, there's still a chance that we'll have to be looking at gold to see if gold goes into the 1120s and starts to hold, because that's going to say, this is that M pattern. You remember what I'm talking about in the dollar is exactly what I'm looking at in the euro dollar currency pair. But if I go to the continuous contract of gold, gold broke its left side low. That says to me, and it's closed a number of times below 1080. So that says that the best that it can do right now is 1099 to 1114 is the upside resistance. If it takes it out, especially if it takes it out quickly, we could be looking at something different in gold. So here's what I'm going to recommend. I would not, let me go, EUFX, you said, right?
Yeah, well, we can use the euro because it's the inverse. Yeah.
Okay,
so,
all right. So I'm going to go to the euro-dollar
and it's
currency.
more liquid, yeah.
I'm going to use the currency pair at 1.89. I think for my chart pattern that I'm looking at here, the single leg A up so far, days young, and we still have to, I'd give it another 2 days. If it takes out 1080, closes under 1080 on any day, I think the upside is very limited. And I'm going to suggest to you, you can call me and I'll suggest to you, you can just start a position. In fact, I'm even going to say to you right now, if you want to nibble at this to get a really good feel of the relationship going on between the dollar and the markets and everything else, I don't think it's a problem just to take a tiny position in whatever you want, because it's just going to give you that sense of being there instead of just looking at the chart and saying, now's the time. Because if you start to see that there's a divergence, that the dollar is starting to find support and that the euro keeps coming down, making lower highs and lower lows, that's telling you that the dollar still has internal strength. So yeah, I'm going to make it real easy. Here we go. DXY, I'm looking at the dollar. The dollar right now is bouncing. It's an okay bounce at plus 0.60. But if the dollar index at any point up until Wednesday to Thursday of next week, if it has a bounce and it closes above 99.20, that weekly chart is saying to me, I want to go to a leg D. So you can use the dollar. Right. Okay, that's the dollar continuous contract. If, in fact, we make a new low and you take out, it could be anywhere 97.30, anywhere 97.50 to 97. Start to close below that, the dollar is going to come down and take time, and it's going to make another W formation, and it'll start to test the 95s and the 94s, and that's what we'll be looking at. So those are the parameters. I think I've tried to make it as clear as I can. A big dollar bounce says that your euro is going to start to go lower highs, lower lows. If the dollar breaks down from here, especially if it's within 2 to 3 days, your euro, you've got to wait for the euro to go short.
Right. All right, thank you very much.
Okay, thank you so much for going. Always appreciate it.
I'll see you next Wednesday.
Good. Oh, you're coming on Wednesday. Thank you very much. I'm looking forward to seeing you. Folks, that'll be Wednesday here in Boston at MIT. On Monday, I'll try to give all that information. It's down in Cambridge, just off Storrow Drive, Memorial Drive, actually. It's very easy to get to. I'll be giving a talk. I'm a guest of the Boston Investors Group. I always give talks there every year. And this is one of them, and I'm looking forward to a perfect time for it. But Thursday is the webinar. That webinar is for subscribers, and you'll get, just as you did last time, you remember when we had that webinar back in February, you'd have follow-ups, what to do, how to look at the market, etc. And so let's get back to our story. We got Kim who wanted to know about CL, and I was looking last night, and then early this morning, I was looking at the defensive stuff. Why did I lose my notation? Yeah, it doesn't matter. Okay. The Colgate is trading at 66.38, down up 79 cents. I was talking about for my newsletter, the heading of the newsletter in the Traders Corner. This is after everything that I do, the charts and charts and charts, with the overview and then the Dow chart. I still make a one paragraph at the top of my Traders Corner because I know a lot of people don't have time. They just want to get the nitty gritty of what's going on. He did want to look at crude oil. All right, let me just mention this. I said, ugly response, Traders Corner. Caution, ugly response, but there should be some upside give back today. Raytheon, Lockheed Martin, GD's, General Dynamics, ROC is Rockwell. Defense area are making serious tops. Even a defensive stock like a J&J is starting to become toppy, and even Federal Express. This is before the holidays. Is tanking. So we're going to be playing the bounce. That's what I said. Now this is going to be very interesting because I had J&J, and I was talking about it as defense stocks. Those are the military type stocks. Rockwell, yeah, ROK is Rockwell. Sorry, what is COL? Why am I forgetting that? Rockwell Collins. ROK is the other Rockwell. Okay, maybe or is a different Rockwell. I wanted the Rockwell Automation. Yeah, okay. So we know the difference there. Thank you. So I was looking at the defensive stocks, and most of them were down. J&J was up at the top of the range, but it looked like it was holding quite well. And I thought, gee, there's a divergence here. Even within sectors, there are divergences. This is such a fascinating market. Let's go to the UCO, which is now CL, meaning crude oil. ProShares Ultra Bloomberg Crude. If you don't mind, I'm going to go to the USO because that is just one-to-one. It is the United States Oil Fund, has exactly the same chart pattern. That went down in an A, B, trough C, trough leg D at this particular point. It is at 1250. The arch formation that I always talk about in the one in the weekly chart is at this particular point underneath the 1237 low that was made the week of the 28th of August. Remember, that was the week of the turnaround, August 24th, the big turnaround in the market. It was 500 points down at the open, and then another 500 points came in. Market tanked, and then what happened is there was incredible reversal. Now look what's going on. You've got in the United States Oil Fund trading down 27 cents at 1250. You've got lower lows and lower highs, and the stochastic is down at 7.87% in the monthly chart. It's not good, but it is a slight positive divergence between where it was back in July. No, that was back. I'm sorry, that was in January of this year when it was at 1630 was the low. Now it's 4 points lower, and the stochastic slightly higher. So there's a slight positive divergence there, all right? Number one. Number two, the weekly chart, if it closes underneath days young, it's at 1250. If it closes under 1237, we'd be looking at something that's very different. 1237 says it has just 1 week, one more bar usually. It either is the bar that takes out the left side low or the very next bar. If next week it closes under 1250, this is going even lower. That's the United States oil. Now we'll look at the daily. Well, we've got a break coming up. I'll do that when we get back.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. The Art of Timing the Trade charts has officially launched at TFNN. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind software, The Art of Timing the Trade charts allows you to scan for Fibonacci formation setups, including Gartley's, butterflies, ABCs, and much more. The Art of Timing the Trade charts is designed to help you when scouring the market for stocks just beginning to form the trading patterns that many investors spend days, weeks, and even months searching to find. As part of our introductory pricing, we're offering licenses available at only $59 per month. We're so confident that you'll love this new outstanding piece of charting software that we'll even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Lock in your low price today by ordering your copy at TFNN.com.
Learn about good health and fitness. Living a primal lifestyle with Nico and Paige. Next on TFNN.
I got a question right here, which I think is really pertinent. I'm just going to show you. Look at the bonds right now. The bonds, you see that you've got that resistance, that long-term resistance came in. And I've been saying that at this particular point, I'm still thinking Japanization of our bond yields. I don't know what the Fed is thinking here, what they're looking at, but certainly this is the time. If they were going to do it, they need to do it right now if they're going to do it. But I'm looking out and I'm saying, gee, I don't know if this is the time to do it. So anyway, that's what I want you to do. Let's just quickly go back to the crude oil. Then I have this. If I can get to this question, I'll try to get to it. First of all, the chart I'm looking at, the TLT, nice balance. Look, 1.2. The reason why I'm at the bonds right now, the yields, those were the yields we were looking at. 120.77 up $1.25. You know, that seems to make sense to me. Anyway, so let's get back to the crude oil. So now let's go to the USO. Where would I start to look at going long crude oil? I still think there's a plethora of oil. I just don't think there always has been, but this time there really is, and you can see that there's the supply and the tankers aren't moving. Nothing. I don't think this is the issue. The issue now is it has to have a trigger point. Now maybe there's a cutback in production. I don't know what it'll be, but I would just use price. And at 12.47, you're taking a chance because lower lows can go to lower lows. I'd rather get a change of trend. So I'm going to suggest, Kim, if you want to, maybe Monday or Tuesday, email me and we can look at it again Monday. But if you're not looking for the exact bounce, I would much prefer to take a trade where you've got peak A, you pull back nicely, and you're about to take out B. And I would say to you then, go 1 penny above B in the USO, and you could be buying it. That would, in your case, you'd go to the USO, UCO. So I hope that helps you. Let's go quickly to Ben in Tallahassee. We've got a moment left. Ben, how are you?
Very good, Basil. Thanks. Am I crazy to take a small position in the UVXY right now?
So, I don't know if you heard Steve. Steve Rhodes always talks about this, that the UVX, did you say UVXY?
Right. It's the ultra. Yeah, go ahead.
It's the ultra short VIX short term. But Steve has pointed out, and he should listen more. Give him a call to discuss it. He has a great analysis of it. He's talking about it being part of futures, that it doesn't necessarily have to respond exactly to what the VIX is doing. It has its own criteria. So let's just treat it as if you're looking at the VIX.
Let's just do the standard VIX then. That's fine.
So let's just look at the VIX, and you can choose any instrument you want. You could even use the TVIX. So the VIX itself right now has pulled back very sharply. It is at 1629. Yesterday it hit 1935. Look at this weekly chart, and I'm going to tell you right now that if the VIX index out of the blue today, there's a 100-point decline in the Dow, and a 16-point decline in the S&P. That VIX will bounce quickly over 1692, the 200-period moving average in the daily. And now, all of a sudden, you're looking at the VIX for the first time in a few weeks, closing above the 9-period moving average in the weekly. At this point, I have to tell you, I don't think it's the play. I think yesterday.
Right. So you're biased toward going on your weekly chart where you still see it positive.
At this particular point, I am. And you know what? Good. The TVI, as you know, this is something that in my newsletter we play a lot. I wanted at 550. I said I'm waiting for 550s. We got there a few days ago. We even went to 535. I decided not to do it because my weekly charts and my Dow and the S&P was still so strong. As a quick trade, it would have been fantastic if we could have got out in time. But right. I must tell you, I
missed the early part of your show, and then this explosion this morning.
Let me do this, if you don't mind, just so we don't run out of time. I'm going to the S&P right now. Look at this week. If you can see it, look at the weekly chart. MACD is still rallying, and the stochastic's at 82%. In the Dow, even though my Dow Quartet is not very good, the stochastic's at 88%. I'm just inclined to say to you, I don't think it's the trade. I think it's coming.
The bottom line is the longer term always trumps the shorter term, right?
I think so. The tide is stronger than the little waves.
Right.
Hey, thanks, Good. Ben. Thanks for calling. I always appreciate your call, and I'm sorry that I didn't get to the end of that question there. I'll be back on.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.